All India OFS, it got a resounding response from institutional investors. It was very smartly priced. So what is the way forward for the company now? Let's discuss that with Mr. TK Anant Kumar, Director of Finance with All India. He joins us live from New Delhi. Mr. Kumar, congratulations on the success of All India OFS. It was very smartly priced and it was timed beautifully as well. Give us a flavor of the kind of investors or the profile of investors who participated in the OFS process.
Thank you very much. The response to our OFS has been very encouraging. We got 2.6 times oversubscription. We got participation from around 75 top quality institutional investors. 65% of them are from foreign institutional investors, and balance are from mutual funds, Indian insurance companies, and retail and HNI. Overall, the participation has been overwhelmingly successful.
Mr. Kumar, congratulations from me again. But we've heard there are names like Aberdeen, Prudential, Amundi, which have participated in the OFS from the FII community. Is that true? If you could highlight some of the key marquee names which participated?
Yeah, as you mentioned, there are some of the names. Apart from that, Halbis and also T. Rowe Price, they are some of the top leading institutional investors from foreign institutions who participated.
Would you say bulk of the bids came from global investors, not local investors, or it was an equal split?
From local investors also, LIC, Reliance Life Insurance, HDFC, Birla Sun Life, all of them have also participated. Unfortunately, LIC's bid, I understand, has been below the cut-off price. So LIC could not get any shares.
LIC will not get any share, Mr. Kumar? That's a rarity, isn't it?
Final confirmation, but as per my sources, we understand they did not get any.
Mr. Kumar, I'm sure when you were on the road shows, institutional investors must have asked you, how the Indian subsidy framework will move. How exactly did you address their queries? How exactly did you address their questions?
The response to our road shows were very encouraging. The company's performance plan strategy was well appreciated. However, they had concerns on the subsidy sharing formula not being clear-cut and not being predictable. We had comforted them by saying that government is moving towards having the under-recoveries reduced, and step by step they are proceeding in that direction. So if not this year, at least from next year onwards, we should see the under-recoveries coming down and some clarity on subsidy sharing to emerge.
Did you share any numbers with them for next year's subsidy burden, which is FY14? Because institutional investors, they are always hungry for numbers. They always look at the fine print, not the big picture.
Unfortunately, we could not forecast the numbers, but the overall policy guidelines, which is likely to be favorable, that we could present to them.
Mr. Kumar, how would your realizations fare from here onwards if the government does allow a price hike?
Current year, we don't expect any significant change to our net realization, which is expected to be around $54 after giving $56 subsidy. But from next year onwards, if the diesel price increase continues, then the overall under-recovery should come down, which would help us in reducing our subsidy burden.
Mr. Kumar, one criticism is that growth clearly remains an issue for Oil India. You have plenty of cash on your books, but it lies unutilized.
We have, at the moment, 2-3 opportunities which are being discussed at advanced stage. We are hopeful that a couple of them should close this year, which should help us in having some inorganic growth and improvement in both top line and bottom line.
Mr. Kumar, final question. Our understanding from the Oil Ministry and the Finance Ministry is that they've instructed all PSUs either to expand or to give a strong dividend. Could you give me an understanding of the total capex you're planning and how much you're planning to distribute via the dividend route?
We are planning a capex of 19,000 crores in the next 5 years, average 3,800 crores per annum, to take care of our exploration, development, and other related activities. This is apart from the acquisition for which we will use our cash reserves. So we have got a robust expansion plan. So we feel the cash flow as well as the cash reserve would be utilized for the capex plan in the 12th year.
Which means you are not looking at increasing your dividend payout ratio.
We already paid dividends 110% this year. Last year we had paid 190%. So we certainly would like to reward shareholders. The board has to take a call on that.
So a dividend will come out, because if your last year ratio was 190, this year you've done 110. I'm sure you would like to match up your last year's ratio.
Let us wait for the board to take a call on that.
Okay. Fair point. Good luck, Mr. Kumar, and thank you for joining us.